So to start, Rob, your reaction to the deal that the president did with Australia on rare earths and what it signals to you more broadly about what they'll do in supply chain?
Yeah, well, as you highlight, Ed, so the supply chain is really important. You need more rare earth minerals to come to the U.S. for consumer electronics and really just the evolution of everything, including AI. And so the rare earth supply chain needs to really develop kind of like the energy supply chain has evolved. And if you think about the energy supply chain in the U.S. is the largest energy producer in the world. AI is going to need a lot of electricity. The U.S. has a lot of natural gas, and so that's a benefit. And that allows the U.S. to maintain its AI dominance because of the natural gas and the ability to produce low-cost electricity in the U.S. And that's just because of the supply chain in the energy sector is very well developed. So rare earth needs to follow a similar fashion.
A big story on the Bloomberg terminal today, written by my colleague Carmen Reinecke, is titled "AI Boom Transforms Utilities from Haven to Soaring Growth Stocks." And we're looking at the idea that the utilities sector is up more than 40%, third best performing group in the S&P 500. This is to an extent your wheelhouse. You are trying to participate in what's happening in AI broadly through energy infrastructure and production. What do you make of that reporting, Rob?
I think it's fantastic, and I think there's a lot of room to run. If you just think about all these cool things that AI does and the fascinating things that AI does, really the foundation of all of that are two things. It's data and it's electricity, basically, and those are the foundational elements. And so at Tortoise, what we're doing is we're investing in the critical enablers, basically, and the infrastructure that enables all of these great AI opportunities going forward. So there's a lot of investment opportunities in electricity, as you highlighted. We need a lot more electricity. Basically, the next decade is going to be the age of electricity. We think that electricity is going to become the new oil. The U.S. is going to maintain its global AI dominance because of its ability to produce low-cost electricity. So companies like, in my backyard, Evergy, it's actually a classic example of what you're talking about. It's going to actually increase its growth rate by almost 50%. Because there's new AI data centers coming to Kansas City, Missouri, where I happen to live. But this is happening all over the place. We're even having Bitcoin miners, basically. And this is really the interesting part. If you think about it, Bitcoin miners are actually transforming from being Bitcoin miners to data center operators. Why? Well, because they have the electricity and the ability to simply transform their business and become really an entirely new business model. And then their valuations are being uplifted as well. Companies like Riot Platforms, Wolf, TerraWolf, are a couple of examples of companies that have been doing this.
What you are trying to participate in tangibly, Rob, is the building of data centers, or what will power them. But when I look at the portfolios that you manage and some of the ETF products, you've kind of broadened out to some of the names that we would more classically associate with servers. Dell is an example. What prompted you to make that move, go beyond the energy thesis?
Well, we just think, if you think about AI is the future, right? AI is the future economy. So if electricity is the new oil, but if you think about really what we're looking at is we think what's underrepresented in investor portfolios is simply this: the enablers, the infrastructure, the companies that are enabling all of this AI development. So what does that mean? Well, that means data storage devices, network switches, those are just a couple examples. Electricity generation are another couple of examples. Cabling, as well as servers. And so all of this underlying infrastructure is really, really important. It's the foundation, really, for the future of AI. And it's these enablers that we think aren't represented in investor portfolios. So we created a product called the Tortoise AI Infrastructure Active ETF that really offers investors a way to invest in the active enablers.